All right, hello everyone. We're going to do our analysis on FSLR. That's First Solar Incorporated. So here's our quick breakdown. So we're doing this for the UCI SMIF Stock Pitch Challenge. Again, that's FSLR is this ticker symbol, and they're on the NASDAQ. Our little slogan is "No rivals, growing industry, made in America." Our rating is to buy. Current price is $127.32 as of March 28th. The target price we're trying to aim for is $363. Timeline of 5 years to reach that. This is prepared by
Fourth year student Kael Gonzalez, Kajogonz at ucsc.edu.
and second year student Nathaniel Aguirre, and I'm a UCI student. So this is our quick overview of our table of contents. We'll be only doing a 13 slide uh, stock pitch today. So, a quick business overview. First Solar Incorporated is a leading US-based solar technology company that manufactures photovoltaic solar modules and develops utility-scale solar power projects. The company also offers services such as project development, construction and operation, and maintenance for those solar panels.
So, First Solar specializes in advanced thin film solar modules, also known as CAD-tail panels. They provide a cheaper and more durable alternative to traditional crystalline silicon panels, showcasing a comparative 60% lower rate of degradation. Their main point of service is to supply utility scale solar farms with their panels, but they also offer other services, as my partner previously mentioned, such as maintenance work and project development. Their current business model is based around their pricing power, being the only manufacturer of CAD-TEL panels in the Western Hemisphere and having no serious national or international competition for the specific technology allows a greater leeway and leverage in business negotiations. This allows them to make a significant profit per unit sold, giving them less of a reliance on sales volume. The beauty here, though, is that their industry and product is poised for an increase in sales volume with or without tariffs. USSFs contributed a record 30 gigawatts of energy, accounting for 61% of all new electricity generating capacity added to the US grid in 2024. The cost of that electricity has also gone down 80% since 2010, and we are now seeing a competitive levelized cost of electricity for solar in comparison to natural gas. Solar has an LCOE ranging from around $29 to $92, while natural gas has one ranging from around $45 to $108. These trends, also accompanied by the fact that solar is less finite than fossil fuels, really showcases the growth potential for this investment.
Yeah, so First has a strong global presence as well with manufacturing facilities in the United States, Malaysia, India, and Vietnam. Its US operations are expanding due to government incentives, while its international production supports global demand. That global demand spans way beyond the countries that they manufacture in. Quick business overview, and this is actually just how we scanned the stock initially. We're looking at just the basic fundamentals, see if we can see net sales revenue growth, and we can. So FSLR has shown steady growth in gross profit and net income outpacing its modest sales increase. This points to improved operational efficiency and margin expansion. If we can look at the brighter blue, pink, and brown bars throughout from 2022 through 2024, we can see that there's a steady increase in gross profit, operational income, and net income overall. Net sales is relatively the same, trending upwards. So in our investment thesis, uh, biggest thing we want to point out is thesis point one, strong financials, including a safe current ratio, steady increases in net income, and further analysis of projected revenues while maintaining the stability of a low levered position is a key point to why we believe that this company is positioned for growth.
And the financials here just keep getting better when you look at the fact that all of their investments are being sponsored by company cash reserves rather than debt operations. So, in this already promising industry with a relatively low level of risk for non-growth, we have the added cushion of avoiding a potential default on failed investments. What's also amazing here is that there is a low risk of entering at an overvalued price. Their stock has recently been sold off due to warranty concerns and a lawsuit they filed against another company due to a patent violation. The recent overall uncertainty in the general markets has not been helping either. Now, the edge here lies in the fact that these concerns are short term and have likely caused some irrational panic selling as well. The fact that their fundamentals are strong and growing, along with their industry's potential for expansion, make the current price an attractive entry point.
Uh, we like to compare it to the MAC, which is a global solar contribution index. The MAC index consistently trades within 300 and $325, and that's back to 2022 if we look back 5 years. Relative, there's some spikes in 20 or later 2022, but again, consistently around that $300 mark. Unlike the index, FSLR is trading below its historical relationship to the benchmark, indicating that the stock is definitely undervalued compared to the sector overall, especially since First Solar is one of the number one leading solar companies in America and growing exponentially. Uh, if FSLR can capitalize on industry tailwinds such as government incentives, increased solar adoption, or cost-efficient improvements, it could rebound and outperform the index. Factors like earnings growth, technology advancements, and market expansions could position it for future upside. So if we want to take a quick look at the R&D investment strategies for fueling growth, just from 2022 to 2024, we can see a genuine steady increase in research and development and a small increase of production startup. The production startup is probably going to start hitting around 2025 as they have a new facility in Alabama and Ohio. But R&D is definitely ramping up in their Ohio facility, which is going to lead to lower costs and better efficiency for their products. The year-over-year increase in research and development, coupled with production ramp up, highlights First Solar's efforts to expand the market share. Another thing, like Kael said, was First Solar's unlevered advantage. So First Solar has strategically managed its growth initiatives by utilizing cash reserves generated from a higher percentage of sales compared to debt. So if you look at the bottom left graph, or the total current assets definitely outweigh the total current liabilities, so they can easily cover any mishaps or any liabilities within that year. And if they're robust cash reserves, a majority of the cash actually comes from their sales and not debt. Even if you look at the current position, their current portion of debt to the bottom right, it's definitely outweighed by a heavy margin. So we wanted to look at the fundamentals further. So we decided to make a discounted cash flows model. But the first thing we had to do is observe the revenues of First Solar and project them further. We first found the free cash flow to equity, including the net borrowings. We found the rate to be around 42 to 52%, depending how far you look back at the historics and what we can access. We looked back to 2022, which is 3 years of historical data, but with that, we can give ourselves a rough estimate of around 42%, giving ourselves a 10% margin of error. Uh, so if you look at from the revenue from 2023 to 2024, there's definitely a big spike, especially in net income. That's because sales are growing and the expenses are growing or not growing as well. If you look at the top right, we have other analysts expecting revenue to consistently grow through the years, especially just in 2025. Um, the next year could be 6.62 billion, as some analysts say. And so we went along with those revenue projections. First Solar is expected to experience a rally in net sales, strategically balanced against its liabilities, with an increase in production and net sales while maintaining consistent health current ratio. The firm's value shows strong growth potential by utilizing its cash reserves rather than being levered. The last part of our DCF analysis is we found that the intrinsic value of the stock is $363 compared to its current stock price of $127, showing that the stock is as undervalued by a pretty good margin. Other analysis believe we're around the same ballpark, but 25 well-reviewed analysis from Stock Analysis Company suggested this is a strong buy. Alpha spread estimates best case scenario being 338, while ours is a little above that. That's a relatively same ballpark of this is a strong buy. PE ratio is 10, while just 2 years ago it was at over 500, which that panic sell was made it baked in to why there's a little bit of speculation to the stock.
Now, when we look at the field, we need to address some things. Historically, the USSRs have been dominated by the traditional silicon crystalline panels, as they have made up 70% of capacity since 2016, recently maintaining their market share. This is mainly due to the fact that importing these from China has proven more cost effective, even if they are less durable. There was also no other alternative to that practice since China leads the world in manufacturing these panels, holding an 85% share, while second place Vietnam holds only 3.4%. However, with current increased tariffs on China and more expected on the way, we can expect a potential pivot towards First Solar's cheaper and more durable alternative, especially noting that their manufacturing is done within the United States. We can expect policy favoritism towards them because of just that. We have previously seen with this administration, they have done so for other companies that boost their manufacturing in the United States. Now, me having brought up this current administration, I want to underscore that despite its preference for natural gas and boosting oil production in the short term, as previously mentioned, solar's levelized cost of electricity is proving more and more competitive with natural gas as time moves on. And very soon, it will make more economical sense to pivot our country's focus towards solar compared to natural gas. Now, this is just a bonus on top. The USSFs are still poised for growth. And so, despite any tariff news or economic updates, as long as First Solar can hold on to their market share, they are still going to be seeing continued growth. So these tariffs, like I said, it's just a bonus on top. And once again, also as previously mentioned, the fundamentals show that the current price is at an attractive entry point, but let's go even deeper in that regard. For a quick refresher, it is only short-term internal and external catalysts that are causing this retracement from previous highs. To further support the thesis that these prices are oversold, we can look at the weekly relative strength index, which is currently at a level of 28.21, clearly underscoring an oversold stock price. If you want to pair this with the monthly RSI, which is at 42.01, it only continues to serve the point that this entry price has a low risk of entering at overvaluation. The selling momentum, as shown by the weekly moving average convergence divergence indicator, also signals an oversold position with the MACD line at negative 19.61. This leaves much room for a mean reversal to the zero line. The bearish histogram here has also been in decline since November of 2024, indicating a weakness in divergence between the MACD line and the signal line. The monthly MACD line is at 3.28, showcasing a retracement to the zero line from previous highs. These two key indicators for measuring a stock's momentum and strength in a trend are providing insights that a potential reversal is imminent. Now, for the
Sorry, my apologies.
it's okay, I'll edit this out.
Okay, my bad.
Let's go to the last one again. Yeah.
Yeah. Oh my gosh.
Now, for the cautious investor who prefers a more structured entry plan rather than simply placing a market order, they can keep the stock on their watch list and wait for a new support level to form, followed by a second higher one. Or they can wait for a key historical resistance level, such as $178, to be broken again. After entry, a stop loss can be placed below the most recent key support level to provide a more planned method of risk management. Thank you.
Thank you very much.